And local trade in need of gains this morning. Markets closing in the red yesterday as investors await a key U.S. jobs report for further cues on the Fed's rate path. Simon Brown is JustOneLap founder, and he joins us now for a quick markets wrap this Friday. Simon, good morning to you. Let's begin with that overview of how the markets are faring in early trade.
Morning, Ollie. You're right. We were a bit red yesterday. The US actually had a fairly good session last night, but it didn't follow through. Asia was red. We tried to open green. We can't hold on. It is that jobs data at 3:30 this afternoon, our time. Everyone's waiting on that because that will give us a lot of insight into what the Federal Reserve is going to do with rates. Have they really stopped rising? Will they pause? And perhaps most importantly, when do they start to cut? So we're going to wait for that. That's really going to give us direction. So far, overall markets off 0.33%, led lower by financials down 0.7%, resources off 0.5%, and industrials a couple of points into the green. Looking at the currencies, Rand 18.79 against the US dollar, 23.61 on sterling, and 20.24 against the euro. On commodity side, we've got gold, $2,046 an ounce. Brent still under pressure, $75.59 a barrel. Platinum, $917. Palladium, $983 an ounce.
Yeah, let's stick with those commodities. Oil prices headed for a 7th straight weekly decline, Simon, on worries over a global supply surplus and a weak Chinese demand. Talk to us about these developments. Help us make sense of it.
Yeah, it is strange, and we've chatted about oil a lot here. Intuitively, because we've been seeing production cuts coming out of OPEC+, most notably Saudi Arabia and Russia, you would expect oil higher. If it was $85, it would make sense. Even $90 would make some sense. I think there are a couple of things happening. The sanctions against Iran and Russia patently aren't working. That oil is being shipped. Some countries, like Angola, can't even meet their full daily quota. They've got 1.08 million barrels a day. They're doing just under 1 million barrels a day. But I think the two key points are, as you mentioned, weak demand, most notably China, although Japan this morning came in with a third quarter GDP also at a negative number, minus 0.7%. And then I think there's some quota busting. I think some countries are looking at their quota and exceeding it and essentially putting more oil into what is a weakish demand environment, and that's keeping oil lower. Frankly, we love it. It's holiday season. It makes petrol cheaper, but it has been a quadrant. We expected oil higher.
Well, let's talk company news. Absa publishing a trading update for the year which ended 31 December 2023. Anything stood out for you?
Yeah, broadly, I thought it was perhaps a little on the weak side. We saw the Standard Bank one a little while ago. That was nice and strong. Nedbank was okay. What we're seeing with Absa is their bad debts are likely to be higher than their through the cycle range. In other words, they usually don't expect bad debts above 1%. They expect to see that higher. Standard Bank, on the inverse, expects to see it below 1%, and Nedbank just a little bit above that. Their costs are sort of moving faster than their income, so the cost-to-income ratio is moving higher. Return on equity is slipping. There's no giant red flag in those numbers, but there's a lot of little data points that point to it being a tough period for the Red Bank.
Let's conclude with the overall South African economy, which dragged overall in the third quarter of 2023. The better performance, perhaps, by the construction sector, lifting that latest Afrimat construction index to its highest level in 7 years. Your sense of that data? What are the important factors there?
Yeah, that was a really good report, and it has been edging higher much of this year. As you say, highest since fourth quarter of 2016. We'll absolutely take that. There were two things that stood out for me. They're creating employment, 145,000 jobs. It's not a big dent in our chronic unemployment environment, but it's moving in the right direction. So we'll absolutely get that. And then what they call wholesale sales of construction material, which is sort of, the big side of the building. That has absolutely been booming. We actually saw it in Afrimat's results a couple of weeks ago, but that sector is doing really good. It bodes well generally for the economy. It's only one green shoot. We need a lot more. But if there's building activity happening, it's good, it's local, it's employment, it's economic activity, but particularly when it's things such as roads, hopefully ports, hopefully rail lines, which Afrimat has seen some action there as well, because that just gives you that infrastructure base which we so desperately need.
Simon Brown is JustOneLap founder. Let me thank you very much for that markets update.